So like a lot of areas in financial services and investment markets, there's seeming complexity around what managed accounts are, but the reality is there's a couple of different options. You can have an SMA or a separately managed account, which has some benefits over the traditional managed fund structure, like beneficial ownership of the underlying securities, but generally there's quite limited amounts of tailoring and customisation that happen within an SMA portfolio. By contrast, the structure that we use to deliver the portfolios to our clients is an IMA or an individually managed account service. And under that structure, we can genuinely account for individual preferences, whether that's reservations and exclusions on particular holdings within the portfolio, tax optimisation outcomes, or just general guidance given to us by the client's financial advisor. Really, one of the key advantages to the IMA structure is that the investor is the beneficial owner of their underlying assets. That means they can genuinely be treated as an individual, which isn't the case in a unit trust structure such as a managed fund that most investors would be familiar with. In addition to that, it means we can genuinely account for individual preferences as communicated to us by the investor's advisor. And those preferences might extend to holding sizes, transaction sizes, reservations on existing holdings, exclusions, and generally focusing on trying to get a better after-tax outcome for the portfolio. When a new investor transitions to the IMA structure, we try and make that transition as gentle as possible, again by working with that investor's advisor. One great example of that is often clients will already own bank shares, which they can transfer in addition to cash that they want to seed the portfolio with. It really makes no sense for an investor to sell their bank shares and give us cash to go and buy a bank ETF, for example. So we have the ability to receive those assets, correlate that exposure so we can continue to manage the asset allocation at a broad level, but genuinely take account for the preferences of that individual investor and their existing holdings. We have really sophisticated portfolio remodeling systems which enable us to genuinely account for those individual preferences on a particular portfolio. We have then the ability to aggregate the trading activity, which allows us to do that in a scalable and efficient way. The most important way in which investors are informed about what's happening in their portfolio is they have online access to a comprehensive range of portfolio reports which shows everything they own, every income they receive, every cash transaction that's occurred, every expense, of course, that's been levied on the portfolio as well. In addition to the website reporting, we do a lot of work on written commentaries. There's a weekly, a monthly and a quarterly note that gives investors a lot of context around what we're doing in the portfolios. And in addition to that, we regularly meet face-to-face with investors and their advisors to explain our process and to bring them on the long-term journey, which will ultimately give better portfolio outcomes.